Good afternoon. I'm here with Yaniv, Managing Partner and Co-Founder of Red Dot Capital Partners. Today, we're discussing whether the Israeli tech market is still an attractive market for the investors. Good afternoon, Yaniv.
Good afternoon.
Please introduce yourself and tell me a bit about the firm.
So I'm Yaniv. I'm Managing Partner of Red Dot Capital Partners. We're an early growth fund based in Tel Aviv. We focus on investing in Israeli tech companies at their scale-up stage, usually late Series A, early Series B, companies that show first market traction, and we help fuel their growth moving forward. We manage shy of $750 million right now. We have two main vehicles that we've invested through. One of them has top 5% global performance. Second one is a top quartile one so far. And we're right now deploying already from our third fund, where we did a first close a few weeks ago. The fund is really focused on helping the best entrepreneurs that we can find in Israel. One of the biggest differentiators for us has been having a very strong LP base in Southeast Asia and Japan, and complementing the Israeli general trend of being able to sell to the US market and giving them access to other fast-growing global markets, which enable them to build truly global businesses.
Obviously, a lot in the news has been about Israel at the moment and the war and things that's going on there. How's that affected the tech startup scene?
Obviously, the Israeli tech ecosystem is a resilient one. We've been through crises before, and this is another one, a severe one that we've been through. But the ecosystem is very resilient, and within a short period of time, after a pause, people came back to work. We noticed that there were some challenges to overcome, but we were able to draw on experience in COVID, where people could work again from home, which was very beneficial. And we found companies kind of being very effective in figuring out what they could do moving forward. So first of all, they're software companies, so there's no impact on sales, delivery of product, or anything on that front. We did see reserve call-up have an effect on companies, but the effect was relatively muted. For more mature companies, they have teams abroad, and so it didn't affect sales and marketing. Many of the executives more affected product and R&D. Earlier stage companies, which the whole team is still in Israel, they lack revenues, and they're younger, got called up more often. And so that, I think, created a little bit more delays. But many of these delays are delays that the company can catch up on, and have already done so quite effectively in various ways. I think one of the other key things was the focus of CEOs, that we saw them kind of focus internally, taking care of their people, of the business and the operations, right? A lot of people, were working from home. Some people were impacted by it, and that was very important to, I think, part of the culture of the companies showed at that point, and the resilience of the founders. But the ecosystem is a resilient one. We've been through crises like this before, and I think that now what we see is that the ecosystem has moved into a new normal, and businesses operate as usual. We see a return to sales as they were before. People are using this opportunity to really push forward and cover for their friends that are still doing reserve duty on that front. We're starting to see also a return to focus on not only managing the business and operations, but also raising capital. And now the market is waking up. I'll even say that we see exits happening, and that's become an interesting phenomena as an indication also for how we are going back into a normal phase of work.
And how have investors seen it? Are they still investing heavily in the country, or?
So first of all, funds experience the same type of, call-up and crisis in the beginning. People focused on either being in reserve duty or volunteering and doing a lot of work in the ecosystem. And I think that was something that was initially a distraction, and now people came back to work. The second thing is funds found themselves very quickly focusing on their own portfolio, right? Not only because I think other companies were not interested in doing deals because they were focusing on themselves, so also funds focused on the portfolio themselves, helping CEOs who have proven themselves to be phenomenal, right? And managing their people, thinking again about their budget, their runway, cash issues around that. And I think that now the funds have moved forward into figuring out where to deploy the capital efficiently and how to work going forward. And many of them are now also focused on fundraising again, now that the whole story is over. Initially, it's important to say that with the backdrop of the global slowdown, many companies were waiting for things to turn around. So because they knew their valuations may have been too high, and they figured they'd wait until the end of the year. So the war caught us kind of Q4 when the deals were supposed to happen. We see already now deal pickup in Q1, and we expect that to continue during the year as companies simply need their capital to continue moving forward and growing nicely. And we see companies that are performing exceptionally well.
So what are some of the wider trends you're seeing in the Israeli tech ecosystem?
So the first trend is back to work, right? We're in a new normal and everyone is operating as usual. Second thing that we see is the good old discussion of rebalancing profitability versus growth, right? And I think initially everyone kind of flipped back, like the rest of the world, into profitability, and now people are trying to explore where is it worth more than the pure profitability. We see exits that are back, and also as board members and investors, we are trying to figure out where there are opportunities to create liquidity, and we see that happening right now. Israel's superpower has always been a significant number of trade sales, right, happen on that front. And I think that many of the strategic buyers see the opportunity in Israel, and we've seen a significant number of exits, high valuations, I'd say probably around $1.5 to $2 billion only in the last few weeks in Israel that have happened, which is phenomenal in any way. The last thing that the funds are focusing on right now is, or the trend is of fundraising, right, and going back, and I mentioned that earlier. So we see companies that are coming back to market, realizing that they need capital, and also funds that are figuring out how are they going to continue, fueling the growth over the next few years.
So where do you see the best investment opportunities in the region at the moment?
So I can talk about Israel because that's where I invest. So the first thing to remember is that historically, periods post-conflict have produced the best innovation in the region, right? People see best government, military technology, figure out new uses for it, and that, I think, spurs a lot of innovation and setup of new companies in that space. Cyber has always been an area of strength in Israel and will remain so. It's not for value investors these days, for sure, but I think we're going to continue seeing a lot of interesting opportunities come out of that. The second thing, I think, is defense and deep tech technology, a lot of them which rely on research in Israeli universities, use of military technologies that get commercialized in a lot of ways, and I think that that's an important thing to also look at. We see also valuations changing there accordingly, and you can talk about also quantum and AI falling into that category for specific uses, etc. Israel has always been good at enterprise software, and I think that that's going to be another area of focus, specifically around DevOps, FinOps, and other areas that Israelis are good at and have been successful, I think, in building significant companies over the last few years.
Perfect. A very interesting country and a very interesting topic. Thanks a lot, Yaniv.
Thank you.